Hey everybody, it's Jason from MAPsignals. Thanks for joining us. What time is it? It's time for the best ETFs for December. Let's get it out of the way right away. Like and subscribe if you like what you see, so we can keep sending you this awesome content. And if you want to know more, please head over to MAPsignals.com. Put your email in there and sign up for the free blog. You don't have to buy anything, but you get a lot of cool insights that you won't get anywhere else. So with that, let's just get into it. What's going on in the market? Well, let's begin right here. I'm in the MAPsignals.com portal. I pulled up our big money charts and I'm looking at the big money index. And do you see what I see? I see a big money index falling out of bed. Okay, we had a max of about 73. That was November 17th. That's when everything was cruising along, looking good. And then all of a sudden, this monstrous selling. So it may not look like this as we're looking at the SPY, the S&P 500 tracking ETF. But if I go over here and I switch it to IWM, we are going to see a lot of Chop City. And then we had this big ramp in November and then boom, just getting absolutely pummeled, a lot of these stocks. What happened? Well, there's Omicron variant, which I'm sure you're aware about. There's talks of inflation. Now recently this week, Powell came out and said we're going to start tightening sooner than we thought, and that might pave the way for rate hikes in Q1. So again, the fears are getting stoked. November is typically the strongest month of the year. That's what I told you last month, but hey, markets do what they want to do. So 75% of the time that's true. Not this year. November ended flat for most of the indexes. So how does that set up for December? Well, let me show you something. Big money stock buys and sells. We're still looking at the Russell 2000. We're going to look at 1 year. Look at all that selling we saw in November. Huge stick over here. And typically when you see those huge sticks, you get a trough right there. You get a trough right here. You get a trough right here. So that's actually encouraging. It's a bullish setup. And we see the same thing in ETFs over here. Truckload of selling usually indicates a trough. Truckload of selling right over here, it almost lines up. You get a truckload of selling that lines up perfectly. Another one. So actually things set up for that being the bottom. Now, with that being the case, let's go check out some ETFs. So once again, how do we do this? Well, we have over 6,500 stocks that we rank and we score every single day. We look for big money buying, big money selling. And once we know what those stocks are and how they fit into the ETFs, I can go and tell you which ones I think, in my opinion, are great deals or some interesting investments. So we're going to start off right away with XLY. That is the consumer and discretionary sector spider ETF. And look what we have here. We have a little pullback from highs. We've been getting buying all year. And this is a really strong performance into this third quarter here, a big lift, and it's got great stocks in it, one of which I own personally, Home Depot. I mean, look at that performance. And if you want to know if it's an outlier stock, we head down here in our portal and we're going to look at all the times it was ever on our top 20 report. Wow. I mean, we're talking about 5,700% gain. So XLY has Home Depot in it. It's a terrific stock. Here's a new one I've seen, MTUM. Don't let the name scare you. iShares, MSCI, USA Momentum Factor ETF, MTUM. Look at what we got here. We got a big sweeping trend. We got big money buying over the course of the year. It's been pretty much a solid performer, and it's got great stocks in there that might be a little more volatile than you're used to. Something like a Tesla. I'm sure you heard of it by now. And if you want to know if Tesla is an outlier stock, just look at all that buying. The stock paused for a pullback. Let's look at all the top 20 instances. I mean, boom. You know, we're going back to a $45 stock. Now it's just south of 1,200. I mean, that is a massive outlier, 11,000% since it appeared on our system here. and try and make you not seasick. The next one up is IWB. That is the iShares Russell 1000 ETF. Why we like this one? Because, hey, it just pulled back from highs. You remember that Russell 2000 chart I just showed you? Got a big, nice, steep pullback. This thing pulled back from 264 almost to where we are here in 255. And like I said, when we see that big washout selling, it's a good time to get involved typically, because forward looking for the market, we can expect, the lows are in. This got a phenomenal stock. Maybe you heard of it. I'm working on Microsoft right now. Our systems run on Microsoft Azure, their cloud solution, phenomenal company, make truckloads of money. They've been around forever. Look at all the top 20 appearances in just 1 year. But if I look at all of them, I mean, you see juice-tastic. I mean, going back to the 90s, look at that thing. Stairway to heaven, like Luke likes to say, up 5,400%, give or take. Let's round down and even just call it 5,300%. I'll take it. Next one up, another one that's new on our list, the QUAL. It's not QUAL. It is the iShares MSCI USA Quality Factor ETF. It does what it says. It's trying to buy quality stocks in there, stocks that are making money, sales, earnings. Remember, when you get red, when you get a big washout on some great quality stocks, that often is an opportunity. This thing just pulled back, not huge, but hey, pulled back from 146 to right around, where are we? We are down here, 141, pull back a little. But again, this thing has some pretty awesome stocks. Another one that I own, I think many of you wear the shoes right now, Nike. Got Chop City this year. We got some buying, we got some steep selling. Again, remember when you see red, look at these red sticks on phenomenal quality stocks. How do we know it's a phenomenal quality stock? I'm just going to go down here. Look at the fundamental score. It's 71. Juicerific. Hasn't been a top 20 recently, but I'll tell you what, it has over years. There you go. You get that stairway to heaven again, going back to say 2005 when it was a $9 stock. Now it's 169, sorry. It's up 1,700%. Again, I'll take it. So before I get into this next ETF, I just want to make mention we have a new contributor coming to MAPsignals.com. His name is Alec Young. You may have seen him on CNBC. He's a really, really brilliant guy, has a great macro view, and he's working on something for us, talking about how small caps tend to outperform in environments that are setting up like these. And he profiled one called IJR because he likes the S&P 600. And this is the iShares Core S&P Small-Cap ETF. Basically tracks the S&P 600. And again, we saw big money buying. We saw a red stick. It's got some quality stocks in it. Now, what sets this aside different from the other 4 ETFs that I was just explaining is this has a lot of sort of lower quality stocks, small caps, stocks that are trying to emerge. But again, look at this big steep pullback here. Probably an opportunity. It does have some quality stocks in there, but stocks that might not appear on our screen because they're lower in market cap. IIPR is Innovative Industrial Properties. It's got a solid fundamental score of 83, a technical. It is a prior top 20. And, we got some signals here since 2019. It was 81. It's more than doubled. It's 256. So we like ETFs that have quality stocks, that have opportunities with pullbacks. And in the case of IJR, we get to maybe participate on a coming small cap bounce once these headwinds are behind us. So there you have it. I'm going to do a little summary here. All of these ETFs, you'll see a percentage on your screen. That means the percentage of stocks that score in our model that can give us an idea of how strong the ETF is. So if 95% of the stocks are scoring, it's a pretty high conviction. So there you have it, the best ETFs for December. If you like what you see, please like and subscribe, send in comments, questions. Feel free to ask. We'll try and get to it. But until next time, don't follow the news. Follow the big money, because where they place their chips, you might want to be on the same side. Take care. Catch you next time. Bye.